So hello students, welcome to the first session for Enrolled Agent Part 1. And in this very particular session, we are going to have a comprehensive discussion with respect to the preliminary work. What does this preliminary work actually stands for and why is it important? Because before filing any tax return, before you actually file the tax returns, it's important to know your client, right? Know your client. We'll come to the notes and slides later on. First, you need to have an understanding. Why is it important to know your client? The very first thing is you actually need your client's previous year returns. Why are they so important? Why are the previous year returns of the client? They are so much of significance. Because from the previous year returns, you'll get to know if there is any refund from the previous year return or through the IRS correspondence, you'll get to know if there any notice or any kind of, letter from the department or the other things. And importantly, this thing also cannot be denied. Apart from the previous year returns, why they are of so much of paramount and significant importance as such, because you'll get to know the detail entry cases. What does that mean, detail entry cases? Actually, when you are actually filing the current year tax return, you'll come to know about this fact. Is there any significant change or not? Is there any significant change or not in the returns, right? Return with respect to this thing, it involves some kind of complexity, but let me make it simple for you. For example, in the previous year, if we talk about the previous year, so there was no capital gain because no capital asset was sold. But in the current year, there is a capital asset which is sold. So obviously there will be capital gain or loss, right? So there is an asset which is sold, because of which there would be some major changes in the current year as such. So technically speaking, to identify the significant change, even for that very particular purpose, the ID password of the client for the text part is really very essential so that you'll get to know, is there any significant change or not? And if there has been a significant change, you need to identify the reason for the same. If there is a significant change, then the reason for that change. Now, let me make things more simpler for you. So, what is as such, a preliminary work which is ought to be considered to prepare the tax returns? The very first thing is that if you talk about the prior year return, it is always helpful for making comparison. Even we stated here, for the previous year and the current year, is if there has been a change, a significant change, so it is because you identified, so the capital asset has been sold in the current year, right? But the point is, how is it relevant? You made a comparison. This is what they are actually talking about. It helps to make comparison. It helps to identify the significant changes. And at the same time, if there has been any errors, suppose there are no significant changes, then you will come across, if there has been any mathematical or clerical errors or other errors, you will get to know the errors in the return of the current year, in fact. So in a nutshell, we can say, and as far as these explanatory notes are considered, so along with these main notes, so this slide will also be uploaded below the lecture so that it has become easy for you to go through these slides lectures as well, along with these explanatory notes at the same time. Okay, let's proceed further now. So far, we have discussed about this thing. The prior year returns, they are relevant for making comparison, for making, identifying the significant errors or changes. But now the situation is like you've already made the comparison and you have identified there are no significant changes. So that means if there has not been any kind of significant change in the current year tax return when compared with the previous year tax return, so that means it should have similar amounts of tax liability or refund because there is no major change as such. Along with this, if we make the comparison of the prior year returns, it helps to identify any applicable items that are not common. For example, we talked about this thing about the, in the current year, capital asset has been sold, which was not sold in the previous year. So even those kind of items can even be identified. Along with this, the accuracy. This is of pivotal importance as such. If we talk about the accuracy of the prior year returns, they affect the accuracy of the current year return even in the areas. Why? Can you tell me why? We are emphasizing on this fact. Current year returns, they are even somehow dependent on prior year tax returns. We are emphasizing on this very particular aspect. But the point is, how come? How is it possible? Because you have actually relied upon the previous year return with respect to certain kind of amounts or the calculations such as refund or any other amount, right? Or the tax which is ought to be paid even for the previous years. And the list goes on. So what is stated over here? Current year tax returns, they are dependent on the prior year tax returns. Why? What is the reason why current year tax return? It has an implication and dependency on the prior year tax returns because it's the prior year tax return only which shows the tax which is still ought to be paid or the refund amount which is ought to be paid by the department to the taxpayer. So it is calculated from the prior year tax returns, because of which it has got an impact on the current year tax returns as well. This is what they're actually talking about. And if we specifically talk about the previous year tax returns, it also increases the efficiency in completing the return, right? Now, this one sounds interesting because from the previous year tax returns only, you're able to complete your current year tax returns. Why? Because whatever information you have gathered for the client, whether the whatever ID password has been given to you for the prior year tax returns, you're using the prior year tax returns with respect to the, because even in the personal details, it's stipulated over there, what's the age, married, married status, because accordingly, the standard deductions amount, they do vary. Why? Because if he's a senior citizen, the standard deduction amount is higher. If married status, if you specifically talk about single, the standard deduction amount is different. Married filing jointly, the standard deduction amount is more. So that's why we can say one way or the other, prior year tax return and preliminary work, it always serves as a base for completing the current year tax return, because of which the efficiency also get increased to a manifold extent. This is what they are actually talking about. Along with this, the previous IRS correspondence. This is also crucial because the taxpayer's previous correspondence, what this is actually correspondence is. That means previous communication with the departments, with the IRS department, the direct tax department in the United States of America. So whatever taxpayers' previous correspondence, any kind of notice from the department, letter from the department, from the IRS is likely to provide a knowledge, an insight as to whatever impact would be there in the current year tax return even. So you get a fair amount of understanding as to if there is any prior audit prior adjustment or judgment, which will have an impact on the current year tax return. So definitely at that point of time, you need to consider all those entry cases. Let's take a layman example in this context. Let's take an example. For example, in the previous year, let's take this way, taxpayer has got a notice from the department with respect to there is some, deduction which is disallowed, because of which the tax ought to be paid is higher, right? Maybe this thing or any other kind of normal letter or whatever correspondence is received from the department, because of which the current year tax amount will vary now, because you ought to pay that adjustment amount as well, right? Adjustment amount for the previous year. This is what they're actually talking about. That adjustment amount ought to be having an impact on the current year tax return as well. So this is what they're actually talking about. And when we talk about the correspondence with the IRS body, which is the direct tax body for, US with respect to the taxation part. So correspondence with the IRS means communication with the department, with the IRS, whatever notices you have received, the letters you have received. Now, technically speaking, even the personal information is quite relevant, because the date and age, date of birth or age, it is quite relevant, because for the single individual, the standard deduction amount is different. For the married person, it's different. Married filing jointly, it's different. If you are having dependents on you, then you are given certain deductions, credits, because of which you need to have even the personal information of the client for calculation of even deductions amount, specifically standard deductions and other deductions as well. But technically speaking, how you come across this personal information, obviously, this personal information would be reflected even in the prior year tax returns. You'll get to know the complete, information from there itself. Along with this, the age of an individual will determine if he or she qualifies for any additional deductions. Obviously, because if the senior citizen, 65 and over means senior citizen, so the deduction amount is higher. For the married filing jointly, so the deduction amount is higher. And even the state issued photo ID from the taxpayer, it is always a good source for obtaining all the personal information. So technically speaking, when a client has turned in person or through online mode through with you for filing his or her tax returns, it's really very essential to procure even the taxpayer ID as well, state issued photo ID. Why this ID is so important? To know the details of your client, right? As to what kind of return is ought to be filed, what are the adjustments, what are the deductions. But at the same time, so far we have talked about, the preliminary work, why the prior year tax returns, they are so much of importance, because they do have an impact on the current year tax return. And along with this, if any letter or notice has been received from the department in the previous year, it is still will have an impact on the current year tax return as well. But now let's talk about the immigration status or citizenship. So let me tell you, if we talk about a citizen, a resident alien, or a non-resident alien, why the situation is different? Because if a taxpayer is not a US citizen, he'll be considered as non-resident when either the green card test or the substantial present test for the calendar year, as such, ought to be considered. For example, if the taxpayer is a US citizen, obviously he'll be having the social security number, and accordingly, the normal rules will prevail. But technically speaking, there is a person who has gone to US on study visa maybe, or on work permits. So green card test won't prevail. Now you will have to check the entry cases of how many days an individual is there in the previous year. So now this one is super duper important. So you need to pay special attention over here. If a person is non-US citizen, so is not given social security number, because this social security number is always given to the US citizens. So that person is required to obtain the US taxpayer identification number, ITIN, right? So this individual taxpayer identification number is having a compliance with the US tax laws. For example, when, in a nutshell, just to make it simpler for you, okay, you need to file a tax return in US if you're over there, residing over there. So the situation, the first probability is you are a US citizen. That means you're already having a social security number. Using that, you can file your tax return, not a problem. But if you're not a US citizen, in that very particular situation, you are ought to obtain ITIN, individual taxpayer identification number, on the basis of which you are going to file your tax returns for the compliance with the tax laws. And accordingly, you'll be filing your tax return. This is what they're actually talking about here. Then this is how this actually, looks like. If we talk about individual or business, why is it so important? Because you need to identify your taxpayer. If he's an individual, then it's the 1040 form which will prevail. If it's a business, let's say a corporation, then the 1120 corporation form is ought to be, filed for your client. So you need to identify whether your client is an individual or a business. And along with this, you need to understand one thing for sure. Any kind of personal living or family expenses, they are not deductible in while calculating the business income as an individual or as a corporate body. Why? Because, that expenditure is not incurred purely for the purpose of business. You are, incurring your personal expenditure, your personal care, or maybe your family, you're incurring expenditure on your family. So are those expenses paid for the business? Even in the individual, let's say, is carrying out a business as a sole proprietor, as a sole individual. So are those expenses relatable to business? If not, then they cannot be claimed as a business deduction, because only those expenses, only and only those expenses which are directly relatable to the business, which are directly relatable to business, can be claimed as a deduction. For example, technically speaking, if we talk about you are a person named Robert. So Robert is having his business as well. And for this very particular purpose, Robert is, incurring some expenditure to carrying out his business. For example, he's paying the rent at the place where the business is carried out. So it is deductible in business. But even apart from this, at some places, the deduction is given into the even for the individual. But the point is, you need to check the code. That means the sections. As we talk about the various sections in India of the various acts, just like that, the relevant code, the relevant section of the Internal Revenue Codes, Internal Revenue Code, IRC, for the body IRS, Internal Revenue Services, needs to be checked. If it allows the deduction will be given. If it disallows, then deduction is not claimable. This is what they're actually talking about. And if we specifically talk about the non-deductible expenses, any kind of rent and insurance premium for the taxpayer's own dwelling, where he is residing. Because here in this example, we covered the rent with respect to the business, because this rent is paid for the business premises. That is why it is deductible. But if the situation like is business is carried out some other place and you are paying the rent, will that be deductible? No. So you need to check out whether this expense is relatable to business or not. Also, any kind of life insurance premium, personal automobile, then food, clothing, domestic help. So they are not directly relatable to business, because of which they are not allowed as deduction. Interestingly, if we talk about items which may affect the future returns, earlier we had a discussion with respect to the prior year tax returns, but technically speaking, if we talk about the items which may affect the future returns, so there are certain items even from the prior year tax returns. For example, any kind of, credit, refund, then a carryover. So it may have an impact on the future tax returns, for which we'll be having a detailed discussion in our next lecture. That's all for this lecture, wherein we had a discussion with respect to the what type of deductions are allowed if you are carrying out a business, why a person who is not a non-US citizen, if he's not allowed for SSN, that is the social security number, he must have US taxpayer tax identification number to filing the tax return in US. Then why the communication, if any, with the previous IRS correspondence is ought to be brought to the knowledge of the person who is filing your tax return, and why the prior year tax returns, they are so much of significance. So the prior year tax return correspondence, then other things which we covered in this very particular lecture, we'll take it to another level in the next lecture. That's all for this session. Thank you very much.